I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance. If I was the government, I'd close it down.
Okay. Kill one person and you're a murderer. Kill millions and you become a conqueror, with holidays, streets, villas, cities, and even countries named after you. Launder $20,000 and you go to jail. Launder $500 billion and you become the biggest bank in America. JPMorgan Chase knowingly helped finance Jeffrey Epstein's sex trafficking operation and got away with it by paying $290 million. They manipulated energy markets during peak demand, rigged global currency exchanges, misled investors, bribed Chinese officials, and even broke anti-money laundering laws. And yet, they're still here, still operating, still protected, and after all of that, they're still the biggest bank in America. They've paid billions in fines over the years for crimes that could have destroyed crypto startups overnight. But instead of being shut down, they keep getting bigger. The kind of negligence that, in the crypto world, would spark congressional hearings and put people behind bars. But for JPMorgan, just another Tuesday, in 2013, JPMorgan Chase paid $13 billion to settle claims related to the 2008 mortgage crisis. You might remember that one. They knowingly sold garbage mortgage-backed securities, wrapped in shiny paper, and dumped them on investors, pensions, retirement funds, you name it. The crisis triggered a wave of mental health issues, bankruptcies, divorces, and even suicides. Millions lost their homes. That wasn't a mistake, that was fraud at scale, and that wasn't the end of it. By 2014, they were hit with a $2 billion penalty for failing to flag malicious transactions tied to Bernie Madoff's Ponzi scheme, the largest financial fraud in US history. Internal warnings were ignored, red flags were buried, the bank looked the other way because the money was flowing. The following year, 2015, they were caught red-handed again. This time, rigging the foreign exchange market. JPMorgan traders were using private chat rooms called the cartel to coordinate price manipulation with other banks. They pleaded guilty to felony charges and paid $550 million to the Department of Justice. That's a guilty plea from one of the most powerful banks on earth. And somehow they just kept going, with not even one person going to jail. The same year, they settled for $388 million over abusive credit card practices, including inflating fees and selling customers useless add-ons they never asked for. In 2016, JPMorgan wasn't just bending the rules. They were actively compromising U.S. anti-corruption laws to get closer to the Chinese Communist Party.
Obviously, there's a real use case. I'm not making this a joke. Venezuela, Cuba, North Korea, criminal, drug money.
An internal hiring program, quietly nicknamed the Sons and Daughters Program, was exposed for what it really was, a structured bribery scheme. The bank hired the unqualified children and relatives of powerful Chinese government officials to secure access to billion-dollar deals in China. U.S. prosecutors charged that these hires violated the Foreign Corrupt Practices Act, which is meant to stop exactly this kind of international bribery. The result? A $264 million settlement, no trial, no criminal convictions, just another fine. Let that sink in. A U.S. bank undermined federal law and helped deepen financial ties with the Chinese Communist Party, all to boost profits. Subscribe to the channel if you think this is unacceptable. Then came 2023, a $290 million settlement tied to Jeffrey Epstein. Internal emails showed JPMorgan knew what Epstein was doing and continued to process payments and protect his accounts anyway, because money talks, even when children are being trafficked. And it's not over. In 2024, the Consumer Financial Protection Bureau came after JPMorgan over Zelle fraud, accusing the bank of letting scams run wild on the platform, ignoring reports from customers, and refusing to take responsibility. Now, in 2025, with only 3 months into the year, JPMorgan was hit with a new lawsuit accusing them of misusing leftover funds from employee retirement plans, money that should have been used to benefit workers. Instead, the bank is accused of keeping those forfeited 401k assets for itself, violating its legal duty to act in the best interest of Americans trying to retire with dignity. This isn't a list of slip-ups, it's a pattern, systemic abuse, criminal behavior, protected by power. And yet, compare this to what happens in crypto. A DeFi protocol forgets to register something with the SEC, they're shut down. A DeFi platform like LBRY gets wiped out for selling a token without SEC approval. Telegram raises funds to build a decentralized network, shut down before it even launches. No fraud, no victims, just regulation used as a weapon. And then there's Tornado Cash. The developers behind the open-source privacy tool were charged in the US simply for writing code, accused of enabling money laundering even though they didn't personally move any funds or profit from illegal use. One of them is now in prison, and they just built software, that's all. So what makes JPMorgan immune? Is it influence, is it political cover, or is it that traditional banks, no matter how corrupt, serve the right interests, while crypto threatens to rebuild the entire game? JPMorgan has paid over $39 billion in fines over the past 2 decades, and they're still too big to fail.
You're a criminal. Great product.
But crypto? One bad tweet and you're labeled a threat to national security. The problem isn't just JPMorgan, it's the system that shields them. So next time you hear about regulators protecting consumers, ask yourself, what kind of consumers are they really protecting? Subscribe and leave your opinion in the comments. And as always, stay curious and stay hodling.